afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Let's tell you the top headlines at this hour. Markets are off to the day's high in a choppy expiry session, while the Nifty is above the 20 DMA. The Bank Nifty trades below that mark. UltraTech Cement is the top gainer in the Nifty after a strong fourth quarter performance. The stock trades at a record high level today. Bharti Infratel has fallen the most since January 2017. The stock is the top loser on Nifty after the disappointing fourth quarter numbers. And Tata Steel too trades with losses ahead of its fourth quarter results later today. Good afternoon, Devina. The expiry day, and I think we've been defending that lows that we saw in the morning of 11,715.
Yeah, and we actually made a high closer to 11,800 but could not defend it, and we've come right back down. So that's been a little bit of a setback considering that we're not being able to maintain these levels, but we're still flat, no steep cuts coming in on the Nifty, so to speak. Bank Nifty coming up next on your screen, and you've got a dip of just a marginal 1/10%. But a pretty similar graph, slightly more volatile than the Nifty 50. You did see it try to maintain balance out here, but giving up and being led lower mainly by those private sector banks. Taking a look at the overall market breadth and what's been happening in terms of the turnover, because that's going to be important considering it's the expiry day. So we're at almost merged here in terms of the advanced decline ratio from being a clear win-win in the morning situation. So that is a little bit of a disappointment. And coming into the turnover, before we take on the heat map, give you a picture of what happens in terms of the volume numbers. You're going to see a big number by the end of trade today. It's already surpassed those average levels of about 12.81 lakh crores. On the cash side, we're at about 24,000 odd crores. The heat map comes up then on your screen. You are going to be seeing it's going to be a bit difficult to gauge in terms of big, meaningful performances, except for the fact that cement as a pocket has taken the charge in today's session. So be it an UltraTech Cement, you've got a Grasim also, which is up 5.5%. UltraTech Cement, after yesterday's big 5% move on the upside on the back of those stellar numbers, great realization. The stock is up again in today's session. Dr. Reddy's, BPCL, you've got Reliance Industries. So oil and gas as a pocket is also looking okay. Yes Bank is up just 0.25% now. The stock was actually up 4.5% in an intraday trade. Amongst the bigger losers, Bharti Infratel, a big knock of about 9%. Disappointing quarter. Indiabulls Housing Finance, that too sees a cut of about 3%. And metal as a pocket looks weak. So you've got a Vedanta, Tata Steel, Coal India, all of them looking weak. Maruti, remember, numbers are going to come out any moment. Maruti is actually down about almost 1%. Coming back to the broader market space, and we'll quickly run through some of the bigger movers within that pocket too. So this is your Nifty Mid-Cap 100, which is flat in trade right now. Big moves in the likes of a Hexaware, which has reported its numbers yesterday. We spoke to the management in today's trade. Ramco Cements, Reliance Power, Oberoi Realty. You've got some big moves in these names. Amongst the losers, Mahindra & Mahindra FinSec is down about 4% Dish TV, Orient Pharmaceuticals, Reliance Capital continues to look weak in the session, about 2.5% cut. Small caps will come up next in a broad perspective on Indiabulls Real Estate. Over the last two trading sessions has given you fantastic returns, almost 8.5% in today's session as well. At JK Lakshmi Cement, this is in tandem with what the entire cement pocket is doing. So if you see, you've got an India Cements here as well, which is adding on to those gains. From the housing finance space, you've got a Canfin Homes, which is up 2%. Reliance Communications, ZID Parry, Rain Industries are looking weak in trade right now. But it's the expiry day. It's going to be an important watch to see what happens in the last half an hour of trade. And how have we set up for that? Navneet is going to highlight that for us. Navneet.
Veena, we were talking about the 11,715 acting as a support. We defended that mark twice, but now the index is at the day's low. It's breached that mark somewhere about 11,712 is where the Nifty spot is trading. If you look at the rollovers, they've been pretty much in line with what we've seen the average rollovers in the last 3 months, 69% for that. In terms of active strikes, 11,800 call, 11,700 put, and the 11,750 both call and put were really active during the session. So we were watching out for the expiry somewhere about that level of 11,750, which has already been bridged. So on the downside, do watch out for the 11,700 mark. That's going to act as a huge support level in today's session. A lot of writing seen at the 11,800 call. Probably you can watch out for the wide range as of now of 100 points towards the end of the session. In terms of stocks which are active in today's trade, clearly Cement Pack is gaining after UltraTech reported good set of numbers yesterday, 75% in terms of rollover. And not only UltraTech, even Grasim moved in line with UltraTech. Remember, Grasim holds about 60% stake in UltraTech, because of which we've seen that big moves. Besides that, India Cement, Ramco Cement, Shree Cement, all of them are in the derivative space, and long positions have been seen, at least for the May series. Earnings disappointment from Bharti Infratel, but look at the stock, how that has reacted. The stock is tumbled nearly 8 to 9%, as you can see on your screen. Even for the April series, which expires today, open interest is up almost 60%, so watch out for this one. And something like M&M Financial, though the numbers look steady, but if you look at the stock, it's come under selling pressure, down almost 4%, and you can clearly see the positions being rolled over to May series, currently suggesting that there is fresh shorting in today's trade for M&M Financial. But Devina, I think the good factor in the last 2 days has been the India VIX. That's cooled off, though it's off the lows of the day, but still it's down about 1.5% or 2%.
But if we had to watch out for one most crucial important thing by the time we hit expiry and come tomorrow's session, what would that be?
I think you have to watch out for that level. Yesterday's bounce back was primarily because of the short covering rally. We are in the expiry week. Most of the technical analysts have been saying this could be the week of consolidation, but I think we broke out of that. 11,700 remains crucial for today's trade. If we breach that, we can see a little bit of more sell-off coming next week.
All right, we'll have to wait and watch, because it looks a little skittish right now for the indices. Let's welcome in a global voice then. Neil Dwane of Allianz Global Investors is joining us right now on the show. Neil, good afternoon to you. Important week. Friday is going to be important. You've got the US GDP numbers coming out. What has been factored in?
Good afternoon. Well, I think the markets are hoping to see a relatively weak but positive number on Friday, which will then lead people to expect some more momentum maybe in Q2 and Q3, even despite the fact that the fiscal cuts in the US will start to lose their positive impact. And obviously, I suppose from everybody's perspective as global investors, we're hoping to see some more details on the US-China trade deal coming in May or June, just so that we can park that and then look forward to the second half of the year.
The US equity markets, as we see, have been moving up steadily. We've been seeing record highs, but difficult to maintain them. The earnings have been a little bit disappointing, and the crude oil prices, that's the biggest spanner in the works. Do you think that, we could actually see a meaningful pause in this uptick?
Well, I certainly think for many of the major emerging markets, like your own Indian market, oil at 75 is becoming a tax on economic growth and consumption. It will also hurt China and the US consumer. So I think we have to watch oil here, because clearly this is a supply shock. There's nothing wrong with global demand for oil, so we have to keep an eye on that. But I also think recently some of maybe the profit taking we've seen in some emerging markets, particularly out of China, has also been the stronger dollar. So I think the pincer of a stronger dollar and a higher oil price is definitely at the margin going to make people maybe slightly more sanguine about how much further consumption can go in many of the economies, particularly in Asia.
Neil, if the crude oil prices were to inch higher from current levels, and I'm going to talk in context to emerging markets, because we've seen a lot of fund flows coming back to Indian markets from the month of February. If the prices were to inch higher from the current levels, do you see any sort of rejig in terms of the strategy the foreign investors would have then?
Well, I think the concern is that the underlying positive growth that we're expecting to see from many of the Asian economies, whether it's China and its rebalancing in the second half of the year, or what after your elections Prime Minister Modi hopefully will be able to achieve in terms of fiscal stimulus and structural reform, the more the oil price takes that away in the hands of the consumer, then clearly we won't see the type of acceleration that some people are hoping for in economic growth terms. It may also, of course, compromise the relaxation that we're seeing almost globally from many of the central banks, in that many of the central banks around the world don't have an inflationary problem at this moment in time and are therefore looking to ease. I'm thinking of India, Indonesia, Brazil, and obviously a rising oil price would start to crimp the room that they maybe feel they have to be able to protect the economic growth they're seeing. So I do think the oil price is very important at this moment in time as we look into the second half of the year. And history kind of shows if we get up to about $85 a barrel, then that is a real headwind for the global economy.
We've seen, Neil, signs of improvement when it comes to the macro data from the Chinese market as well. So going ahead in the emerging market basket, which is the most favorite country right now? Is it China or India or something else?
Well, I think probably in terms of where people are invested, China remains the most underinvested exposure that many have for all the obvious reasons around political uncertainty and fears over the renminbi. I think relatively last year and this year, India has done very well. So I think India is maybe more vulnerable to concerns around a second half slowdown. That's not where the markets are consensually at the moment. But our view on China is very much that Beijing is going to remain accommodative but not stimulative. So China is going to grow at 6.5%, but it's going to feel like probably 2-3 to the rest of the world. So I think we're going to need more domestic stimulus and domestic policy to offset the lack of pulling power that we'll see from the Chinese economy, which is why actually we like India and Indonesia, because once the electoral uncertainty is out the way, we are expecting to see more reform, more stimulus, and maybe even some interest rate cuts. So I think at the moment I like your bond markets more than I like your equity market, but maybe that's because hunting for income is maybe a safer place to be just at this moment in time as we wait to see what happens with the global economy.
All right. Neil, we leave it at that. Thank you so very much for joining in. Appreciate your thoughts. I think you're going to watch out for those Maruti numbers that are flashing on your screens. I think closer to 1,800 crores is what's their profit number. They were expected to come in slightly low, I think 1765. They're at 1795, I think, on the profit number, which is still a figure which is lower on a year-on-year basis, but nonetheless matching up to expectations. That's a profit number. On the revenue side, the expectation was somewhere around 21,450 crores. I think they've come in slightly higher, 21,460 crores, but looks like a match in terms of what the expectations were from Bloomberg estimates. There's no major reaction to those Maruti numbers, but the crucial part is going to be the margin numbers. Remember, there was an expectation of about 12.5%, but like Yatin was talking to us in the morning, that it's not about the sales numbers, because you get a monthly breakup of the volume, so you pretty much are accurate in terms of projecting what the sales numbers would look like, but it is the margin, the operational margin numbers that are crucial to watch out for. And 12.5%, while was the expectation, that was something that the market was factoring would not be met. That number we still don't have, but I think it's come. It's at 10.6%. Yeah,
so I think it's a
big miss.
It's a big miss when it comes to the operating performance, and that's what the street was expecting. Let me just also highlight the stocks has not done well at all in this particular week in anticipation to numbers, and we were expecting the numbers to come in to disappoint, at least from the auto pack, but the stock's recovering a bit. As you can see, the top line is in line with what the street was estimating. The profits are bang in line. I think it's coming at 1795. Our estimates were 1765, slightly above that. But I think the question will be on the operating performance once again. This was a quarter. Remember, there was a lot of inventory pala with all the auto companies. Production scale backs have happened, and the stock, I just want to highlight, Davina, because it's corrected so much, the numbers are not looking great. I don't know if there is any sort of short covering which can come in today. Actually, it's spiked up.
The counter in the last 2 weeks, start of April, we moved up from 6,300 all the way to 7,400, and the last week some pressure mounted, and you saw the stock now at about 7,000. Let's get in a sense from Ankit Merchant of SMC Institutional Equities. He's joining us right now on the show. Ankit, 1,800 crores packed, but the big disappointment on the margin number, which was at 10.6% versus Bloomberg estimates of about 12.6%.
Yeah, hi. I think on the margin front, most of the stuff, as we know in the last quarter also, the margins had come down very low at 9.8%. And the management had guided the margins, it is going to be very difficult. And in the last particular quarter, they ended up giving a lot of discounts. Also, as we know, the sales slowdown had hit them hard. And with the inventory pile-up, we also know what issues have happened in the industry. But I think still, looking at the current where the stock is currently, I certainly believe this will be taken quite positively by the street. Considering 1800 as a PAT, I think it's pretty much in line with the street. And this will form as a one particular year wherein we saw high growth sales in the initial quarters, which slowed down. And I think with the initial recovery now, which we have been seeing right now, and with good monsoons anticipated, I think Maruti would rebound from the current levels.
Okay. There's another income component also, but it's not included in these numbers because these are the numbers, revenues from operations. External of that is another income of about 867 odd crores, which takes the total income closer to about 22,327 odd crores. What happens here on? Because obviously it doesn't look like this is going to resolve itself in one quarter. You will actually land up seeing the pain carry forward for the PV industry as a whole, a CAGR growth of about 5 odd percent. Maruti may do slightly better, expectations of a CAGR growth of 7%. But how would you position yourself in a Maruti now?
So I think, we all know that it's quite a stock which trades at the premium, and it is the reason has been the high industry, market share which they've been able to gather over the period of years. And the first any particular uptick which in the automobile space as such per se, specifically for passenger vehicles, will be seen in Maruti Suzuki only. So I think the investors are justifying the premium which the Maruti Suzuki is getting. Also on the other front, whenever we have seen a sharp decrease in the earnings, it has always rebounded in the this has happened previously also. So I think, and it has always moved ahead to become almost a doubler from those particular levels. So I think at this particular juncture, many long-term investors who would be evaluating Maruti Suzuki as a stock would be looking at it, and they'll be looking at it from the accumulation phase, wherein we all know the growth is likely to come post this election and post the months with good monsoons. So I think it's a good time to get into the stock.
Okay, Ankit, we'll leave it at that note. Thanks a lot for joining us and taking us through your views on Maruti's number. We've got one more analyst, Chirag Jain of SBI Cap, who joins us on the show. Chirag, the numbers are in line, I think, but the underperformance on the operating side, which was expected, but the margins have come even lower than what the street was expecting. Are all the negatives now priced in when you look at Maruti's stock? Because if you go by the commentary in the past, they've said that, we've seen slowdown in the election year. So do you also expect that the current quarter that we are in, there is more pain left when it comes to Maruti's financials?
So in fourth quarter, definitely margin improvement has been quite weaker than what we had anticipated. But again, this is obviously clearly a reflection of weak market per se. From a franchise perspective, Maruti still continues to remain strong. From an outlook perspective, I think post-election there should be an improvement in demand, mainly because the customer inquiries are still growing in mid-single digit. And even the user market, as per our checks, shows a very strong double-digit growth. So there is definitely a very high consumer to buy cars. It's more of deferment of purchases which are happening because of uncertain macroeconomic environment. And post-elections, definitely we should see an improvement, more because from a product portfolio perspective, now Maruti to launch few new models. And obviously liquidity situation, which was a big issue over the last 6 months, that seems to be now stabilizing. So these are two important factors from overall recovery perspective for Maruti.
Quarter of pain, or we can see improvement from the first quarter of FY20? Okay, Chirag, I'm sorry, I'll have to end it there. Thanks a lot for joining. We've got the management who is addressing the press conference on their quarterly numbers. Let's cut into that.
On the BSE, NSE sites, because if we gave this to you before that, then I think we would be guilty of all kinds of very serious crimes. So I had to wait. Well, we are here again, and the broad results are there. This year, our total domestic sales have grown by 6.1%. This was against our original expectation of getting to double-digit growth. And as we had said last time even, that double-digit growth was not going to happen. And the market has had a downturn after the first quarter, actually. The first quarter was excellent, but after that, it's just been going down. The total number of vehicles which we sold this year was 1.86 million. And our revenue growth was 6.3%. Net profit was 7,500 crores, a growth, well, not really a growth, a degrowth of 2.9%. And this happened despite the increase in sales because, as you're all aware, the rupee has not been particularly robust against other currencies. And the dollar and the yen and the euro, they all went up. So that was much bigger of a drop than what we had expected. Along with that, commodity prices reversed the trend and they went up. We had some extra depreciation because the second line in Suzuki's Gujarat plant got commissioned in January. So we had, just for this 2-3 months, the depreciation of a new plant coming in. And because everybody was suffering from the downturn in the market, so not only us, but the entire competition was offering large sales promotion discounts, and we had to follow suit. So that expense went up. So while sales revenue did go up by 6%, the expenses went up faster, and that is why profits came down by 2.9%. So that is the whole year position. The quarter 4 is very much similar to what happened in quarter 3. Sales were more or less flat, and in fact, the total sales in the quarter decline of 0.7%, more or less flat. And profit was lower by 4.6%. So that's the financial figures for the year. The board is recommending a dividend of 80 rupees a share, which is unchanged from last year. We felt that since the profits had actually not gone up adequately, it wouldn't be justified to increase dividends any further, so we kept it at the same level as last year. And that's as far as the financial data is concerned. This year, going forward, we are faced with the fact that over the last 3 quarters, the market has been very soft. Not only now for the car sector, but as you know, two-wheelers have had a bad time. The commercial vehicles in the last couple of quarters have had a bad time. So somehow everything seems to slow down before the general elections. Why this happens, I don't know. Somebody has to find an answer for this. But this happened in 2013, it happened in 2008, that in the months before the general election, the market slowed down. It's happened this year. In those 2 years, the market did pick up. But this year, we can't automatically expect the market to pick up, because while I'll mention these, there are some favorable factors, there are also some unfavorable factors which were not present earlier, and which way the balance will tilt is anybody's guess. The favorable factors are, of course, that the stock market has been going up. Now, why the stock market is going up, you people probably know better than I do. But the general experience is that when the stock market goes up, the growth of the economy and of the automobile sector is not far behind. That's one favorable factor. The monsoon prediction by the IMD is also favorable. So that also should lead to a growth of the market. And number 3, Maruti has generally kept ahead of the rest of the competition. So if the overall industry does go up, I would expect Maruti to do better. So these are the favorable factors we have. But against this, there is this whole 3 quarters, 4 quarters of downturn in the market. There is the uncertainty about petrol prices, especially after this embargo on Iran, what its implications will be on fuel prices going forward. Will some people say that this is short-lived, fuel prices will come down. Others are not so optimistic. We don't know what this is going to happen, but fuel prices are a major factor. BS6 is around the corner. And because of BS6 plus the new regulations on safety which have been partially enforced and which have to be completed in the course of the year, prices are going up. Diesel cars of BS4 have to be sold and registered before 31st March. The important thing is registered. So both the manufacturer and the dealers have to work backwards from that need to register, keeping some margin to ensure that the production of vehicles is done in a manner which will ensure that those vehicles are sold and registered before the year ends. Because you don't want to end up with BS4 vehicles on the 1st of April, because then they are as good as junk. So that is one factor which is going to affect things. How will people react to this diesel vehicles getting phased out? As far as Maruti is concerned, we will work out our production schedules to make sure that we end up the year with no BS4 diesel vehicles left in our stock. The petrol vehicles, and we have how many models? 16?
16 models.
16 models. We have to introduce BS6 in all 16 models and all variants of these 16 models before, again, 31st March, so that any vehicle sold in April 20, has to be BS6. A BS4 vehicle can't be registered next year. So there again, we have to alter that. Now, so to do that, we have started introducing BS6 vehicles. As you know, the Alto BS6 has already been introduced in the market. And this process is going to carry on throughout the year. How is the customer going to react to BS6 vehicles is another question which we don't know, because it's never happened before that suddenly this kind of a change in technology has happened, cost rise going up. So that's another issue which creates uncertainty in our minds. The election results in any case create uncertainty in everybody's minds till the 23rd of May. So whatever is going to happen in the market, to the extent that election results determine that, can only be known towards the end of May. And whatever impact that has in the first quarter anyway, just now there's no impact. I mean, the market remains as flat as ever. So these are the uncertain factors. And which way is going to tilt, as I said, is something unknown. What we have done as a consequence is that unlike having a fixed target for the year, we have decided that we'll keep a range between which we hope to make our production and sales. That range has a minimum and has an upper side depending on which way this whole pluses and minuses work out. The minimum range overall for production and sales this year is around 4% growth over last year. The upper range which we are keeping at this point is seeing that the first quarter in any way is not going to be a good quarter. So we really have 3 quarters in which to grow. If we grow, we are keeping the upper range at 8% growth over last year. So the target for this year is not a fixed target. It's a range between 4 and 8%. So that's as far as next year is concerned. The only thing which we will work on this year is to continue our efforts to continue to grow the sale of our super carry, the LCV, which, as you know, in this last year, we sold something over 23,000
Yes, sir.
LCVs, and we are just a newcomer in this market, but we have now a 12% market share. But in this coming year, we want to grow this further. We're expanding the network. We will continue the sales thing. The problem again with LCV is going to be that from 1st April 2020, it has also to be BS6. And our judgment is that a BS6 diesel LCV with a small engine, the cost increase of upgrading it to BS6 will be too high, and we intend to discontinue the diesel version of this from next year. There will be no diesel LCV because we don't think we can meet the cost target for customer requirements of this kind of vehicle. But we will have both a petrol and a CNG version of the LCV. And our belief is that the petrol and CNG version will actually become more economical for the user. And these are all small people who want the most economical way of running their businesses.
Okay, that's management of Maruti talking about their quarterly performance, and the stock now has, by the way, tumbled almost 1%. Let me tell you, for the week it's down 6%. When the earnings announcement came in, there was a bit of recovery because the stock was already down 5% for the week. Initial bout of short covering, and from those levels it's corrected again. Reason being, the operating performance has not been good. It was expected, but the margins have come in way below what the street was expecting at 10.6 versus expectation of almost 12.5%. All right, moving away from Maruti, let's now go across to the developing story. The 3-judge Supreme Court bench, which was hearing a plea alleging conspiracy against the Chief Justice of India, has ordered an inquiry into the charges. Arpan Chaturvedi joins us on the phone line with more details on that. Arpan, what are you gathering?
That's right. So, the 3-judge bench, which was headed by Justice Arun Mishra and included Justice Rohinton Nariman and Justice Deepak Gupta, have now ordered investigation into the allegations that there is a conspiracy to destabilize the Chief Justice of India's office. There are not many details as to what exactly are the allegations specific and as to who is conspiring and who's making these conspiracy. But what we have gathered from the judge's observations in the court is that the lawyer Utsav Bains, he's alleging that for some disgruntled employees, which includes 2 courtmasters who were a few months back were terminated from their job. Them as well as a couple of other employees have been indulging in a conspiracy against the Chief Justice. So now today the Supreme Court has ordered that the inquiry will be headed by a former Supreme Court Judge, Justice A.K. Patnaik. This will be a single-member inquiry panel. He will be assisted by Delhi Police, CBI as well as the Intelligence Bureau as and when required. Justice Patnaik will, there's no deadline on him as to when will he have to submit his report. The report, whenever it's submitted, will be in sealed cover. And now this particular case will come up once the report is submitted. The Supreme Court also once again clarified that as far as the allegations of sexual harassment against the Chief Justice of India are concerned, the inquiry panel of Justice A.K. Patnaik will not look into it. There's a separate in-house committee which is looking into those allegations, and the court has made it again very clear that these 2 issues will be looked at completely separately.
All right, Arpan, thanks very much for joining us with the latest update on that. We'll keep a close track on what happens from here on. For the markets, we are still flat. There's no big change that's happening there, but obviously Maruti looks slightly more weaker. Remember, from a growth guidance, a very targeted growth guidance this time around, they've actually made it a range from 4% to 8% on the upper end, considering that Q1, like Mr. Bhargava mentioned, will not be a very great quarter for them. Siddhartha Khemka of Motilal Oswal is joining us on the show right now. Siddhartha, good afternoon to you. Let's begin with Maruti. Obviously, the clouds are not, going to move away in any hurry. You've got a growth guidance of 4 to 8%, but that is still on the lower end, and margins continue to remain stressed.
Yeah, good afternoon. So the results, if you see, we have already seen the headline numbers are broadly in line to marginally better than expectations. However, the key concern of the margins have actually negatively surprised by coming in at around 10.2% compared to the expectation of around 12% and last year's figures of about 14%. So that concern would continue going into Q1, as we already seen that while the management has clarified that the discounts have come off, the other cost pressures are still not off if the volume growth is not picking up, and in Q1 because of elections and all those things, slowdown is still persisting. So that pressure could remain for some more time, at least going into the Q1 of the current financial year. Otherwise, if you see, we have seen quite a lot of interest in the stock once it was around that 6,400, 6,500 mark, where we saw a sharp jump in the stock price in the last 2-3 weeks, where it moved up to almost 7,400, 7,300 levels. So if one were to look at a long-term perspective at a stock like Maruti, it's one of the market leaders in the four-wheeler space. There is a transition happening from BS4 to BS6. This time the company is well prepared. They will have a smoother transition compared to last time when BS3 to BS4 happened. A lot of inventory pileup had happened. They are also planning to phase out the diesel in the LCV segment to cater to the economical business of the LCV. So all these things should be taken as positively in the long term. Valuations, we have seen that once the growth comes back, the stock trades at a premium valuation compared to others in the segment, because we don't have a pure play PV player in the company in India listed. We have a Tata Motors which has CVs, then it has JLR. We have the Mahindra & Mahindra which has tractors and SUVs. So it's a pure play passenger vehicle segment which on a longer term basis the growth should come back. So from that perspective, one should definitely look at stock if it comes down to around those levels, about 6,500, 6,600 levels. So valuation will also come down from a 1 year forward, currently trading at around 24 times, to if it corrects to about 20, 22 times, it will become an attractive buy.
All right, Hadrien Mendonca of IIFL is also joining us on the show right now. Hadrien, expiry another hour away. By the time we hit the close, is there any sort of a trade that is, are you able to take that trade on the index, whether it be the Nifty or the Bank Nifty?
Yeah, hi, good afternoon. As far as the index is concerned, I think the move that we saw yesterday was, a pretty large one, 150 points move just a day before the expiry. So I guess, the move largely would have already been, factored in. I think as far as the expiry is concerned today, we could see a flattish kind of a close. So I think avoiding the index would be a good idea. I would, prefer to be more stock specific rather than trading the index.
Okay. Pritesh Mehta of Yes Securities with us as well. Pritesh, what's your approach to trade this afternoon on the indices? Would you take a trade for the next 1 hour?
Good afternoon. Now see, the strength of every market is judged on corrections, and in fact we got to see in last 5 trading sessions we had a fall from the peak of 11,856. and in the process we lost 2.5%. But the confluence of support around 11,600 came into play in yesterday's trade, and we saw a fantastic recovery setting in. But I think by large the move which was expected to take place have already come in. I don't see Nifty going much higher than 11,760, 770 maybe by the end of today's trade. So I think there's not much we can do on the index because we already saw strong movement taking place.
Okay, that's the call coming in on the index, but let's quickly get you some stock-specific ideas going in from our experts. Pritesh, I'm going to come back to you. Any stock-specific strategies?
Now see, there are a couple of ideas. The first one is TVS Motors. Now see that the stock had a terrible time in 2018. From the peak of 788, the stock had a sharp decline. In fact, it made a low of 447. From GAN perspective, we can say that it completed a 360-degree orbit on downside. It failed to go above 810. That led to a decline. And from thereafter, what we saw was a 4 to 5 weeks effort of base building taking place around its 200 weekly moving average. And after that base building process, it attempted a break on the upside. So I think a big move is on the horizon in this counter. We can go long for a target of 580. And second recommendation is a buy on L&T. Now this stock for the entirety of since 2018 has been stuck in a trading range of 250 odd points. In fact, in yesterday's trade, if you look at the yesterday's low, it came to the midpoint of the entire trading range. So I think if you look at the setup of the infra index, if you look at the ratio chart of the infra index against the Nifty, we can see the uptick, the momentum and strength in this setup in the infra index. So I think if you want to bet on the rally coming in the infra stocks, L&T appears to be the best bet, and we can see at least 110 rupees move on the upside maybe in next short term.
Hadrien, what about you? Stock specific ideas?
Yeah, I have a sell and a buy both. So the sell call that we are, the stock that we are slightly bearish on in the short term is a Concor. We are seeing a clear extension of weakness on the daily charts. It is unable to, cope up above its short term as well as long term moving averages. Secondly, we are seeing clear break of important support levels. So I think Concor should be a good bet for short term in terms of selling. One can consider going short on a Concor May futures for a target of 483, keeping a stop loss at 501. Now the long call that the long stock that we are bullish on is an IDFC First. This has been a top pick for a while now for us, and we are playing a pure mean reversion kind of a strategy in IDFC First. If you've noticed, the stock has corrected pretty handsomely in the past 3 weeks, and right now it is finding support at its 50-day moving average. So I think ideally it merits a buy around these levels. One can expect a target of 56, keeping a stop loss at 51.5.
Very quickly, Maruti has breached yesterday's lows of 69.10. What would you do at current levels? Would you create fresh shorts?
See, Maruti, has been under a lot of pressure in the past 3 to 4 trading sessions. That means it was factoring the results that it has come up with. I think from here on, it wouldn't merit to go ahead and short Maruti at these levels. I think ideally, a swing trader should go ahead and create long positions. Your stop loss should be very, strictly around the 6670, 6700 mark.
Just one small point that we mentioned in the morning as well about Maruti Suzuki. If you bring up the 6-month chart, thrice or 4 times it's taken support at the 6500, 6600 levels. So now that having fallen from 7500, it is just very close. I mean, 300 points off from those levels. Maybe you got to question the risk reward in taking a short call on Maruti Suzuki. The only
closer to 63, 64. So
6400. Okay, yeah. So maybe still 500 points away. But the other point that goes against is something that Yatin was saying. The Bloomberg consensus estimate for growth was 11.5 odd percent. They have said 4 to 8%. With an assumption that they average it out, that's a 50% drop in what Maruti believes they'll grow versus what the street believed it could grow, and that should be the big dampener on Maruti Suzuki this time around. So interesting to hear what happens there. The other one though, which is an even bigger casualty today, is Bharti Infratel, now close to 10% lower. Siddhartha, Khemka, you guys would have spoken about this in the morning. The results were bad. Did it warrant a 10% downtick?
Yeah, so results were definitely weaker, and that is what even weaker than what we had expected. So that I think a lot of positivity was built around the stock sometime back. It had moved up. So we had a neutral rating on the stock with a target price of about 290, so which was 4% lower than yesterday's closing price. So a 10% maybe an exaggeration, but I think this is where we see. The market reacting very sharply to any sharp surprises. So a negative surprise has resulted in people not only selling the position, maybe there is short selling as well, which is leading to such kind of reaction.
All right, that's on Bharti Infratel, which is currently down 10%. 1 month is down 11%, but I believe the bulk of it is coming to today's session itself. Should quickly pull up and see what's happening to crude oil right now, because just a few minutes back, Brent crude touched $75 to a barrel for the first time since October, as U.S. decision to remove sanction waivers on Iran continue to support prices. Let's speak to Aslan Ahmed of Argus Media, who's with us on the phone line right now. Aslan, thanks very much for taking out the time. 6-month high for Brent crude prices. It doesn't look like it's going to take a breather anytime soon. We saw it breach 74, and 75 was just a stone's throw away.
Yeah. I mean, I think that it's obviously the Iran, the U.S. decision not to extend the waivers for the Iranian oil buyers was definitely a push-up. But I think also is that the added support is coming from the, cautious optimism that the U.S. and China is actually moving towards some sort of resolution or some sort of trade agreement. So I think those are the key factors that have supported prices. It's really gone up quite a bit, so I'm not sure how much higher it's going to go, because there is still the indications from OPEC, particularly the Saudi oil minister, that they would not leave the market scrambling, or their customers scrambling for crude. So I'm not sure whether at some point they will make some sort of announcement or something saying that they could offset. I mean, Saudi Arabia has said that if there is a need, they could offset the Iran lower supplies. So I think we have to wait and see what happens. But I think that these two factors were probably the two key things that push prices up to $75 for Brent.
As in, just one last question, it's a two-part question. Want to get in a sense from you as to two sides of the equation. One is the demand side. Now that we're seeing China picking up in terms of its economic growth, there is an expectation that demand will be much more stronger from that region. And on the other hand, supply with removal of the waivers on the sanctions, which could cause the temporary crunch. Will Saudi Arabia and the rest of the OPEC nations be able to overcome that shortfall in a meaningful manner if demand continues to keep rising?
I think that in theory, if you look at the numbers, there should be, because Saudi Arabia produced, they really cut production quite drastically in the first half of this year, in line with their agreement to reduce with the OPEC and output cut agreement. So, and they were over-complying with the production cuts. So, in a way, that sort of tightened the market. So if they're producing a lot lower, it does mean that there is a decent amount of spare capacity within Saudi Arabia. So I think that if you look at just numbers, there should be within OPEC, led by Saudi Arabia, possibly, UAE, Kuwait, and even non-OPEC like Russia, they could, if they ramped up production, there could be an offset in the supply of Iran crude into the market. So I think it just depends on whether there is an agreement or whether they feel that the market really needs that oil, or whether prices are being driven by speculative forces or something. So I think that if you look at numbers, there should be enough that could offset the lower Iran production. That's what I think.
We leave it at that. Thank you so very much for joining us. There's a quick comment coming in on elevated crude prices right now, which have gone past that $75 per barrel mark. That's going to have its own implications here for our own equity markets, our own macros. So all of that kept in mind, oil marketing companies for one should see what HPBP, IOC, all of them are doing in this session. So still up about 2.5% for an HPCL, no longer part of the index. BPCL and IOC, in fact, have been going up over the last 2 or 3 trading sessions as well.
Okay, that's the comment coming in with regard to rising crude oil prices, which can impact our import bill as well. Just Indiabulls Ventures numbers were flashing on the screen. The numbers look pretty good, hence the reason why the stocks moved higher by almost 4 to 5%. The profits are somewhere about 110 crore, which is versus 55 reported in the corresponding quarter, 4% higher for that one. I want to pull up Godrej Consumer. That stock's almost at day's low, I guess. It's down 2.5 to 3% in trade. Remember, the earnings come out somewhere next week, 2.6% lower. Hadrien, any trade you would take after a fall of 2.5% at levels of 656?
Yeah, absolutely. One should consider, going short because the stock has actually, failed to live up to the gains that we saw in the past 2 trading sessions. Secondly, we are also seeing a rising channel pattern kind of a breakdown on Godrej Consumers. So I think apart from that, we are also seeing a negative crossover on the relative strength index. So I think all these parameters are definitely indicating that there is furthermore weakness to come. So going short on a Godrej Consumers May futures, can be initiated. I think going forward, 650 to 645 should be the levels where we could see Godrej Consumers finding some kind of support.
Rupees also breached the 70 mark in today's session. It's at 70.16. So alongside Brent crude breaching 75 mark, rupee also depreciating. It's not a good sign, at least for the Indian markets.
Not at all. And it's, I'm guessing it's a fallout of what the crude prices have done. That it's showing on the currency and the bond yields too, by the way. I think yesterday it was at 7.47. I don't know if it's hardened further. Okay, 7.4650. So the yields too have looked
in the morning.
In the morning. Okay, so hardened from there as well. These guys, the bond markets too have fallen off in the session. But hey, it's not all gloom and doom. Let's talk about some pockets which have done well today. A couple of commodity pockets have done really well, led by UltraTech. Grasim would naturally benefit because it's holding UltraTech shares, but the others, couple of other cement stocks, Orient Cement, India Cement and the others have also done very well. So this is what one good set of numbers can do to the space at large. Really good going for the cement stocks in the session today. We spoke about Bharti Infratel, Siddhartha, Khemka. What about the cement pocket? You guys have a coverage on a lot of mid-cap cement names at Motilal Oswal. Do UltraTech cements inspire you about what could happen in the space at large? What's the favorite mid-cap cement company currently?
Yeah, Neeraj, so you would have remembered, I think almost a month back on your show, I had said that we can look at an UltraTech from a contra view, and now with the post the results, I think the entire street has become positive. So yes, it definitely does give a lot of inspiration to look at some of the other mid-cap names. We have seen, especially in the South-based companies, that the pressure that they faced in Jan, Feb, and then later there was some price increase that they have taken, especially in the southern markets, which has led to some special interest in some of the southern names like the Ramco Cement and India Cement. While the north-based players continue to have those volume growth, but realizations are still stagnant. So yes, UltraTech, very good numbers. We have, I think, upgraded our estimates by around 6%, which is leading to a target price also revised upwards to about 5,200. So so UltraTech continues to prefer among the top picks in the large cap space. In the mid cap space, we like companies like the Ramco Cement from the south and JK Cement from the north and west, focused on the north and west region.
All right, that's the cement pocket. Interestingly, JK Lakshmi Cement also is another name that's up and about in today's session. But remember, in the western region, now that you've got UltraTech Cement, and this acquisition of Benani's, there is new supply that's coming in there, which could actually, support price, and you may actually not see the prices move up too heavily, which could be a slight bit of a setback for a counter like JK Lakshmi Cement. But that's the cement pocket as a whole. We're focusing more on, Maruti and its numbers, and what's led to the drop in the share price is Maruti management's commentary on the guidance for the current financial year. 4 to 8% growth guidance versus a street expectation of 11% growth. Yatin Mota, he's joining us with more details on the same. Yatin.
Maruti management, came out with their annual guidance in the press conference that we just heard. Chairman R.C. Bhargava said that the growth range for, FY20 is expected to be close to 4 to 8% for sales as well as volumes, along with production. This time Maruti first time has given a range, in which they're expecting the growth to happen in FY20, which is 4 to 8%. And more importantly, the management pointed out, since there are various uncertainties starting from general elections outcome to BS6 transition, and when the BS6 transition happens, there are also various safety regulations which kick in, which will clearly increase the price of cars. And taking all of these factors into consideration, the management is expecting a 4 to 8% production growth. Now, if you look at the Bloomberg, revenue growth consensus, which is of course, volume growth plus the price hikes that are possible, the analyst community is expecting 11.2% growth. So it is very interesting to see how really the analyst community reacts, to this particular guidance statement, since a lot of them would be factoring in slightly higher growth and could adjust, their consensus ratings as well as earnings moving forward. Also, one important thing to watch out for will be the lower volume, growth projections. That will have probably some bit of negative impact on the operating leverage, which means that the profitability and the margin picture from here on could also, dampen slightly versus what was expected earlier. It is very important to watch out for the conference call which will happen today evening, and how really does the analyst community take this 4 to 8% guidance and assimilates it, FY20 estimates. Probably, in all chances, given the weak earnings and probably slightly muted guidance, we could see earnings cut happening on Maruti in most probabilities.
Showing in the way the stock is reacting right now as well. Yatin, thanks so much for putting that into perspective. By the way, I'm revisiting this, but just to mark it, Bharti Infratel is now down over 10%. That's a seriously steep fall. The other one ahead of its numbers, which is looking slightly soft today, is Axis Bank. So down less than 1%, but looking slightly soft in the session. By the way, crude price may have been up, but oil marketing companies are still doing okay. So keep that at the back of your mind. Siddhartha, Khemka, my final question to you. The other pocket which is looking slightly okay in the last couple of sessions is sugar. After a while, there is a move which is concerted. All the stocks are moving up together. Any coverage, any thoughts here?
No, Neeraj. Unfortunately, we don't cover the sugar sector as of now.
Yeah. So then you leave us with maybe a stock idea, something that you guys have recommended your clients to buy. I incidentally read a report from Motilal Oswal on Lemon Tree Hotels. You guys believe that EBITDA could move up 10 times in the next 3 years?
Yeah, so if you see, we had before that we had come out on a report on Indian hotels as well. So we believe that the Indian hospitality industry is at a cusp where the supply addition is now getting moderated and the demand is picking up well. The industry works on a fixed cost model, so any incremental utilization, so occupancy directly leads to a sharp improvement in the operational profitability, which we expect going forward, growth, average room rate growth of around 10 to 12%, and the supply to moderate, which leads to a sharp improvement in utilization. So currently they are operating somewhere about 70-75% utilization, and a lot of these large players, the likes of Indian Hotels and Lemon Tree, they are doing a lot of capacity expansion. So adding new properties and going through the asset-light model where they are taking a lot of these properties on management contract. So existing properties, but they are giving their brand name and managing. So looks a very a cyclical upturn in the entire hospitality space. So yeah, a mid-cap name, very strong presence in the mid-tier space with 2 or 3 brands that Lemon Tree has. And on back of this improvement, sharp growth in the EBITDA, we believe that the stock should do well in the times to come. Valuations obviously are factoring in some of this growth that is already there. So we believe that because of the higher growth compared to an Indian Hotels, it should trade at a premium to Indian Hotels. So we have valued it at 22 times on EV EBITDA basis on FY21. That gives an upside of roughly about 20% from current levels.
Okay, Siddhartha, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the market. Just want to address the markets. We've breached the 11,700 mark. Nifty is now at 11,685. The last half an hour volatility on the expiry day will play out now. Bank Nifty is also trading with cuts of nearly 200 points in trade, 29,668 for that one. Very quickly, we'll slip into a short break. On the other side, we'll get you the Fab 4 stocks of the day at 3:15 p.m. We also tell you what the dealing rooms are recommending and some closing strategies from our technical experts. Stay tuned.